Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line, Chief Strategist at T3 Live and T3 Trading Group. Scott, you're rested up and ready to go on this Monday morning.
I'm all ready to go with levels in hand, trying to figure out what is next. I remember a week ago, you and I were on the phone, and we were talking about the break below 2040, 2000. We were like, and then as we're speaking, like, okay, now the future's down 40 handles. Now they're down 60 handles.
I was just thinking about that too over the weekend, and I think like out of any of the live calls that I've had, we're on here and we're talking. I'm talking about your strategy, and you're talking about your levels, and you're looking to buy, and we're just watching it, and you're like, I gotta go, and it was just, I'm like, oh, because there were really some moves there. So, first of all, were your systems okay? I mean, some people had some systems.
Yeah.
Your systems were okay. All right, that's good. I mean, I know you were looking to buy, and I know that you had given me some levels, and I don't even think you had a chance to get them at those levels. I mean, unless you had.
No, you know what?
What happened,
You
Scott?
did,
Go ahead.
actually. Thank goodness we were on the phone, because some traders who started buying early, they got a little ran over on the open. I actually didn't get back to my desk until like 9:15, and then I gave a quick meeting to my traders. So by the time I actually looked where things were, the spiders were already like, I don't even know there. They might have been like 187. So I put in orders. Remember we talked about the October lows, which was like 1820 to 1840, which I didn't think we were going to get to. So real quickly, my swing account, I put in, buy orders for the spiders from 185 down to 182, and I put buy orders in my swing account for Apple from 95 to 92. By 9:32, all of a sudden I see my swing account's down almost, 5 digits. And I'm like, whoa. And then I was in my active account, I started buying Facebook to like 77, and then all of a sudden it's 72. And, it's like, you get a little worried and a little panicky, and then took a deep breath, and then 3 minutes later, my swing account was up 5 figures or so. And then, everything kind of bounced back. The Dow went from being down 1,000 or 1,100 to only down 600. Pretty much sold half my stuff. And then took a deep breath, tried to stay with some, and then once we were down like 200-300, I sold a little bit more. And then I was like, okay. I kind of felt a little lucky, but I also felt that I was prepared. I wasn't long coming into Monday because the technicals were getting weaker. The range broke below 2040. I thought the measured move would be 1950, but you don't have to know where it's going to go if you're in the right position, whether you're in cash, and if you were short, you got even more pleasantly surprised. So anyway, that was last week. It was a great opportunity for those who had levels, who were prepared, who had their game face on. Now the question is, with the futures being down 15 handles, what type of packing and filling do we do, and how do we hold here as far as, with the oscillators back down to neutral or even positive? We're not oversold, and we're right back at some resistance areas. So I come in actually again today flat, and, you can see some of the levels that we mapped out for the spiders and the S&P to figure out the composure to help give us clues on the speed again.
Did you get done on that 92 limit? Because I see it traded. I saw it. I know Dennis has some GTCs in there at like 99.5. I think he got done in the lower 94s. Did they give you that 92 print or not? Because I saw 92 even was the low.
I can't tell you exactly.
Okay.
I might have been in 94. It might have been in 93. I don't know exactly where. I could have been in 250. Again, the morning was so fast that I came in and I just put in like 4 or 5 orders, scaled down. And then I traded in my active account, and then I blinked and I had all those shares. And I was like, ooh. So, but they did trade there. Apple did get down there, and the spiders did get below 183. Like, it doesn't show it on the chart. Like, on the SPX, you don't see, 1830 down there. It got down there. So, a lot of stocks got down there and traded there. And, there was, it was a mini flash crash. But
it was.
It was also warranted considering what was going on.
All right, I got your SPY chart here, and I like that you moved on from last week, and you're talking about this week because that's what we like to do here on our show. And that the highs from Thursday and Friday, you absolutely have to respect those. They were within a couple points of each other up here in the 1990 handle. I mean, I don't think you can look for some really continued upside until you can, until you can pierce through there. Now coming down back on the downside here, I mean, there's a lot of fund managers and traders and investors scratching their heads saying, we're going to go back down to 1831 here, or, it's just going to be this kind of grind lower with these vicious pops like we had on. I had some buddies that were shorting on Friday, and they're like, oh, this is it. This is it. I got, 6, 7 handles in it. And then they're like, I just got stopped out. I just lost money on that trade. Is that the kind of, you think that's the kind of trading action we're going to see?
Well, at least, you have defined levels again. You have 1990-ish is resistance, and above that, it was hard to be short because you couldn't rule out a retest of 2020 or 2040, especially considering how we did hold up on Friday. So coming in, not very short. It was hard to be short over the weekend, I thought. And it was just as hard to be long considering the type of travel range. So I'm happy with this type of open because I didn't want another pain trade where all of a sudden we're up 15 handles and traders couldn't buy it because we came too far too fast. Everyone would short it and then it would continue higher. So down 16, 17 handles, I think, is healthier. So if you look at the spiders chart, this is what we have. You got Friday's low, which is 197.92. We're basically right around that. In the first, I would say 30 minutes, if that doesn't get reclaimed, maybe the bears push it a little bit below because there's a bit of an air pocket there, down to I would say 194.50 to 195.50. My gut tells me that I think that area holds this week. Maybe there's a push down to 192.50, but I don't think that we retest the lows in the next week or two like some think. But who am I to say that? So what I'm going to do is, this morning I'll see if some of the go-to names go green. If we hold somewhere around 197.50, I might buy a little bit versus the 30-minute low. Like right now, we're at 197.80. If we spike down to 197 and come back to 197.50, maybe I buy some spiders versus 197 to see if we hold higher like we did Friday. But then if we break 197, get out of the way, and then the next real level comes in, like I said, it's like 1950-ish on the SPX, which is 194.50, 195.50. And I'd rather see that level, to be honest. Maybe not today, maybe tomorrow. And if we hold that level and and trade off of it, I think that would do so that would do good for the charts. The charts need to pack and fill. We need to get a little bit of a higher level area, to base trades off of versus having it just the limited data that we have right now.
Yeah, I think you're making a great point here about the 1970 handle. I talked about it on Friday. We were chopping around a lot through it in the pre-market. We did get that bump up. I think there might have been one of the Fed governors or someone speaking when we spiked up to that high in 1992 and a quarter. Do you put any significance on? I like retracements. The main one I like is the 50% retracement. We came down from 21.26 and a quarter down to 18.31. 50% is 1978.50. We had a couple closes above there. Is that anything you like to throw in, in your technical analysis is something like a 50% retracement of a big move like this?
Yeah, I think that you have to because the type of retracement you have gives you the indication of the next direction. So at this point, I just say the move down we had, you said it was a 50% retracement of it. So it shows that it was a decent retracement. It wasn't like if it was just like a third. If all we did is retrace a third and
good point.
We couldn't just rally back up, then that would show how weak the market was. But because it was like a 50% retracement, you have to kind of be neutral and say, okay, the market had enough power to bounce back 50%. So now I would do, on the flip side, use your retracement rules the other way. Look at the low from last Monday to where we rallied to, and now figure out what type of retracement we have this week to give us clues on whether or not we could retrace the other move further. So if we can hold the top third of last week's move, that would show you some commitment to it that maybe people would feel like they missed out, and then you can get more upside. If all of a sudden, we start breaking 1950 and break more than a third, not hold a half, then people say, oh, that was just an oversold down, so we go back to the lows. So the retracement rules help give you clues on what's next, and that's how you judge
the validity of the move. Yep. Scott Redler on the line with us, Chief Strategist at T3 Live and T3 Trading Group. What Scott just mentioned there, about the S&Ps and the spiders and stuff, it's very important. You can apply those to all your stocks too. And I think that, to measure the validity of this rally, take a look at your stocks, the high and the low, and see how far they pull back today. Let's just go to some individual issues. We only have a few minutes left here. Apple led the charge off the lows. I was doing some studying over the weekend, and I looked how that stock was trading $2-3 off its low when the S&P's double bottom at that 1831 intraday. Actually, when 1831, 1833. Since it was the leader and led us out of the abyss here, do you think that if we do start to go back, Apple's going to be the leader on the downside?
Well, it's good to watch it, right? You see
Of course.
first of all, I'm with you. I saw the relative strength in Apple, and Apple was like the first stock to go green, but I think the Dow is still down 500 points. So I'm glad that it played by the rules and had a little follow through. So if you want to say look at Apple right now, from the low 90s to one as high as 113, I would think if this market wants to hold up, Apple probably holds 109 to 110. Like somewhere in there, I would think you want to watch it and figure out if you could buy that dip. Right now, that's still below it. I don't know if you could short it here to there, but same thing with the spiders. You have 111.54. That's Friday's low. So see how it holds there. If it holds there, that's very impressive. Then I bet you the market's not pulling in that much. But if it breaks that, I would say 109, 110. That would be a spot that I would give it a close look. And if that doesn't hold, then we're retracing further. And then your next area is that 105 area, which was mid-level support from Tuesday, Wednesday of earlier last week. So I think if the Bulls want to keep Apple as a leader, they want to hold that 109, 110 level from here up until, at least the refresh of their products, which is the 9th.
All right, Barron's urging to look at dividend stocks. Maybe some of the momentum stocks have lost their luster in this kind of environment. And I guess if you looked in the dictionary and you went to momentum stock, you would come to Netflix here. And boy, this got a nice bounce up here. Are you biting on this rally here in Netflix?
Well, I'm gonna use the same strategy. You had a move from 85 back to 120, and this morning's down a few dollars. So. It's already below 115.88, which is Friday's low. So that kind of gives you a clue that maybe some things could trade below Friday's low. And I would say 113-ish is a spot. That's the gap from Thursday. Right there, I'm going to look to see if I could buy versus that, or see if there's a relative strength divergence there where the market goes lower and it holds there. I think that's one spot to look at. And if that doesn't hold, it gets filled all the way down to 110. So if you want to look for clues on what the market's going to do, I think Apple and Netflix will give you some of those clues. And then I would say, on the other end, you want to look at some of those names that had their first feisty bounce, like an XOM and a Chevron. That was the first move that they made that actually gave you some potency. So you want to see, the retracement there, if there's any commitment, because I feel like that's the first attempt for a real low in some of those names.
All right, before we let you go, I see that you were nibbling at some Twitter here, playing it with the option markets. Are you biting on this upgrade from Bob Peck here, knocking on the door of the $28 level, gap to fill up to $28.20? You know, let this thing see if you can get up and hold 28, or if you bought some calls, you got a buck move in a down market, gonna cash it out.
To be honest, full disclosure, I bought the options like 2 weeks ago when it was down at 29, so I might be just getting even on them. So, I wasn't, when I play a stock with options, typically I don't have to make a trade that's broken in, and maybe there's a catalyst. So that's why when it broke 29ish for the first time, I'm like, let me buy some calls just in case. And, you just had a move in the stock from, 22 back to 27, 28. So for me, I wouldn't be buying Twitter today around 28. But I'm also not in the money enough to sell my options, so there's 3 weeks left there. But I'd like to see it hold up. I'd love to have Twitter back in the trading go-to list, and maybe this is a start because of the size of the move. But it did just come from 22 to 28. I probably wouldn't be buying 28 the first time it sees it. I would be trimming it if you did buy for that bounce, and it did have some relative strength Thursday, Friday. So if you're in there as a trader, you're getting rewarded for using that tactic.
We've been on the line with Scott Redler. He's chief strategist at T3 Live and T3 Trading Group. He joins us every Monday, no matter what the market circumstances are, and we really appreciate that, Scott. Get ready for the open here, and look forward to talking to you again next Monday.
We shall see. That's Labor Day, so maybe Tuesday.
Oh, okay. I'm going to give you a paid day off on next Monday, okay?
All right. Good luck today.
All right.